Well, we got another one, MillerKnoll. Fundamentally, you got to like what you see. I look at the free cash flow, $350 million. I look from a fundamental standpoint, everything checks every box. The one issue that they had on this one, stock had run all the way up near that 52-week high. And then all of a sudden, year over year, the sales are down about 11%. 13 to 31, that's what the range looks like. I like this one. I think fundamentally it makes a lot of sense. A lot of positive buyers out there that are insiders going in and buying and accumulating some stock. There's some sellers as well, but when you look at the buyers are dwarfing what we're seeing from the sellers. So I think that's something that tells me they think it's too cheap. They think this thing's actually traveling in the right direction. Maybe not today, but maybe there's going to be a little bit more of a trigger to buy even more.
When executives that get these incentive stock option plans want to sell, right, just for their own personal liquidity, it doesn't necessarily mean that they're bearish on the company. They have to do it pursuant to an organized plan, a leak out plan, and that's to avoid trading, selling on inside information. So the selling tends to be somewhat predictable, and you can actually look at it in the company's filings. The buying, however, is often in a separate category. So I tend to look at that a little bit differently and put a little more weight on it. That's just my personal opinion, Pete. And I think, look, this is a continuation of the RH story. It's a continuation of the Home Depot story. There is an anticipation in the industry, housing, furnishings, building supplies, things of that nature. As the Fed eases off on rates, that industry is going to come back. John likes to say all the time, construction, the largest single sector employer in the United States. And this is all planning, anticipation, and guidance around when these CEOs and their teams think that happy days will come back. I don't think it's this year. I don't think 75 basis point cuts does enough to people's average monthly mortgage rate to get them to go, as we talk all the time, from a 2.5 or 2 3/4 fixed to a variable that's still going to be a lot more expensive, even if it's 75 basis points lower. So I think this is a 2025 story.